occupancies. But now let's shift focus to the entire hospital space. We have Max Healthcare. They've reported what was a stable performance in Q4 with occupancy coming in at around 75%. The company's seen a decline in the EBITDA per bed due to a new hospital addition in Dwarka. To discuss more on this and the company's Q4 performance, we have Abhay Soi, who's the chairman and the MD of the company, joining in now. Abhay, hi. Thanks very much for taking the time out. This is Ekta. If you could just start by giving us a sense in terms of the EBITDA per bed. It's come down this quarter, 73.9 lakh versus, say, 76 lakh same time last year. Tell us on a normalized basis, what was it and what were the key trends, considering that you did have Max Dwarka, which was added into the mix this quarter?
Well, Max Dwarka wasn't added in the mix this quarter. It was added earlier last year, month of July. It broke even in a record time of about 6 months. And presently, at the exit of Q4, it was operating. It's a 300-bed hospital. We've operationalized 235 beds over there. It was operating at a 73% occupancy with about approximately a 30 crore revenue for the month. But having said that, it's sort of marginally brought down the overall EBITDA per bed. But I think the thing to focus is on really ROCEs, right? I mean, we've also done 3 other acquisitions last year. We acquired Lucknow, which in the first year of its acquisition has grown by 56% revenue and 106% as far as EBITDA is concerned. We acquired Nagpur earlier on in the year, which was March last year, which again has grown at 26% top line and 56% on EBITDA. We acquired JP Hospitals, which is the marquee hospital in Delhi, which was in October, November last year. And that is, yet being integrated, but yet it's has about 21-22% EBITDA margin. But having said that, some of these acquisitions, obviously, they don't have the same EBITDA per bed presently, but that's exactly where the opportunity lies in moving that up.
Exactly. You have a lot of moving parts, Abhay, considering that you have a lot of these acquisitions which will be integrated into the fold in the next couple of quarters. So give us a guidance in terms of what we can expect on the EBITDA per bed, or what we can expect in terms of occupancies and possibly the ARPOBs going forward.
With respect to ARPOBs, you've seen, our previous hospitals have had an ARPOB increase of about 7.5%, which is pretty much in line with how it's been performing every year prior to that. We've also had occupancy of 78% of erstwhile hospitals. If I take out the occupancy of Dwarka, which obviously has been ramping up, which is the new hospital, then the overall occupancy again is close to 77-78%. But because of the newer hospitals, and particularly what we acquired in the month of October, November, which was the 2 JP hospitals in Noida and Chitta, they have overall occupancy of 46-47%. And that is what is sort of dragged down, at least optically, the occupancy. But having said that, we've reported a year-on-year increase of 29% as far as revenues are concerned, 26% as far as EBITDA is concerned, and 21% on profit after tax. And that's a fairly sort of healthy growth, we believe.
Absolutely. International patient revenue, you've had some issues with regards to Bangladesh and Yemen. Has that shown any kind of improvement this quarter? And what are you guiding for, considering that, there was around a 28% growth in Q4 when it came to international patient revenue?
Clearly, we haven't had those issues because, last quarter we grew by 24% year on year. And this quarter we've grown by 29% year on year. So we've been able to sort of make up those loss of those businesses through other sort of direct-to-home fly channels that we've been able to create. So, this business, again, like I said, has been growing by 29%. And again, that's a fairly healthy growth.
I just wanted your thoughts on the run rate for Max at Home and Max Labs. You did about 100 crore combined in both of these in the fourth quarter. At what quarterly run rate can it grow from here?
Well, I don't give forward-looking statements, but consistently they've been around 20 to 24% growth, I think, for many, many, many quarters now. And Max Lab has grown by 22%, whilst, Max Lab has grown by about 20%, whilst Max at Home has grown by 22% in the present year.
Okay. Are you seeing any kind of incremental testing in Max Labs, hospitalizations because of, the recent increase in COVID-19 cases?
So we haven't really seen any increase in COVID admissions. Anecdotally, there have been COVID cases, and but these are very mild COVID cases. I think it's very unlike perhaps what's happening in Hong Kong and Singapore at present. But it's been very mild, I think, all across.
You don't think that could increase in India? I mean, the cases are mild. It's happened in Hong Kong and Singapore, which is a little more. We don't need to worry, right? I mean, not a business question, but this is a genuine question from everyone who's watching and for everyone who wants to know what the trend would be.
It's so difficult and so hard to sort of predict that trajectory because, how this virus morphs, will it morph into something different, etc. It's very, very hard to call. I think it's important to sort of keep an eye out and monitor. And the isolation is a great thing. Anybody gets fever, gets temperature, or any of the symptoms of COVID, or even one believes may not be COVID, right? But it's prudent to get yourself tested and isolate. That is something which has clearly worked in the past, and that should hold us in good measure.
Okay, I just want to come back to the business. Wanted to understand what was the increase in, say, complex cases that you all probably serviced this quarter. I was looking at another hospital company. Robotics revenue has been, over 50% in terms of growth on a year-on-year basis. What was yours in terms of, say, complex surgeries, oncology, robotics, and what are you guiding for, and how is it adding to your margins?
Clearly, I think the 7% RPOP that you see, I think about 2.25% every year is due to price increase. I think everything else is largely due to, and you must keep in mind, when you're already operating at 75% to 78% occupancy, it's incremental. But that would mean it's about at least a 12 to 15% increase on more complex cases, more oncology cases, and so on and so forth. So that has been our mainstay. I mean, you've seen some tower specialties, particularly like oncology, that has been growing at 24-25% per year by itself. So I think, it's just a lot more awareness of it, and perhaps a lot more people are getting sick because of oncology, and some of the other tower specialties as well.
Okay. You're expanding in Thane, which is like a micro market. What's the reason behind that? It's around a 500-bed hospital that you're looking at, and it's going to be an asset-light model, I understand. What is the kind of growth that you're looking at from a micro market like that? And is that a strategy that you're probably going to adopt going forward?
Right. I think a place like Mumbai can host at least 3 to 4 hospitals from us. I think Thane is a extremely, extremely robust market, and we've seen some of our peers do extremely well over there. So I mean, it's clearly been on the agenda for a long time for us. We've been seeking land over there, and we were happy to sort of engage with, really a blue chip partner over there to be able to set up an asset light. This is in line with what we are doing in Zirakpur in Mohali, what we've recently announced in Pithampura in Delhi as well. And in line with what we've done in Dwarka, so this asset light sort of model works for us, where somebody else who has the land builds out the hospital and gives it out to us, for a long, long period, 50, 60 years is typically the lease. And, that's how we've been, it's an asset light model. It has high ROCEs for us, and it's in line with what we've sought out to do.
Okay, just quickly then, Abhay, just wanted your perspective in terms of the competition rising within the entire hospital space. We now have Adani's entering into the Ahmedabad as well as the Mumbai market. What is your sense, considering that there's so much PE money within the entire space as well, and you have bigger names, conglomerates which are entering as well?
See, typically PE money is finite, over a finite period. They look at an investment over 4 to 5 years. What we need in India is creation of quality healthcare assets. Just the extent that we are underpenetrated. In today's date, we have a baby boomer population, which every year is getting a little older, is getting a little sicker. awareness is going up. And as we are moving towards being a $5 trillion economy, you have people's affordability index has moved up. And, just frankly, our expectations of public spaces has significantly improved. I mean, look at the kind of airports we go to, right? P money, fortunately, unfortunately, is largely deployed towards M&As and then exits, because to build out a hospital can take you 4 to 5 years. What you do need is money, long-term money coming, from the likes of Adani and others, etc., to build these healthcare assets, because that's how assets are going to get created. It's not necessarily going to be done by PE money. In fact, I would vouch that perhaps won't be done by PE money. I mean, we ourselves are opening in the next 90 days or 120 days, we're going to be opening 3 new hospitals. Mumbai hospital will be ready, the Saket one in Delhi, then we are going to be opening Mohali, and so on and so forth. I mean, last year we were 3,500 beds. At present, we are close to 5,000 beds. By end of the current financial year, we'll be 6,500 beds. And, by 2028, we should be 9,000 beds. But, clearly what we are also doing, all the profits that we generate, all the profits that we make, and I can say this for the entire industry, it's not really a dividend paying industry. The entire this thing sort of goes back to creating more healthcare assets, which are so needed in the country, right? I mean, we're just the extent of under-penetration. And you require all sorts of formats, you require all sorts of investors. Adanis have a deep sort of pockets, and also have been nation builders in so many ways. So, we're welcoming all of this.
Okay, all right, Abhay, we're going to leave this for a longer conversation next time, the changing landscape of the entire healthcare hospital market. Thanks very much for joining in and speaking with us. Well, that's Max Healthcare. They are expanding to around 9,000 beds in the next couple of years. We need to